Good morning, traders. It is 7:30 a.m. Eastern Time, Wednesday, April the 4th. Taking a look at the morning charts, we've got the US dollar index. Yesterday, we saw a pretty good shakeup after the FOMC meeting. We saw more or less, they said that there wasn't any quantitative easing in the near future. And of course, that sent the US dollar higher simply because they're saying they're not going to be printing more money. And anyways, a rising dollar means usually falling stocks and commodities, and that's what we saw yesterday. So if we're just looking at this pattern here, we've been working on this kind of head and shoulders possible neckline that it's been holding up for a little bit. Started to look as though the neckline didn't really mean anything the last couple of days, which I pointed out yesterday morning, and how we were kind of getting this little falling kind of wedge that we'll likely see if it breaks to the upside. We'll see it go right up to around the 79.50 to the 80 level, and that's where we're starting to come into this morning. We got some pretty good resistance levels. It can still go a little bit higher, hit this upper resistance level of this upper trend line, but overall it's starting to look as though the move is getting a little long in the teeth, and we're coming up to a pretty key pivot level where I think we could see the US dollar actually yesterday looks like it was a knee-jerk reaction. We might see it actually give back those gains, or a good chunk of them, today. So if we just zoom in on the chart and we actually just kind of drop down to a smaller time frame, go to a 30-minute chart, we're starting to get a pattern here that usually results in a sharp drop. And more or less the pattern here is simply we've got a strong move to the upside, and then what you see is these kind of surges to new highs. Usually when I see 3 surges to a new high and you kind of get a flag that's actually flagging up, it just means it's kind of getting carried away in the move, and eventually when it drops it should give back a good chunk of those gains and come back down. And of course, the way that this flag is set, there's all these pivot lows in here. There'll be different pivot lows to trigger as prices drop, and as it drops it picks up momentum. You'll see the US dollar is known for spikes up and then spikes straight back down. So we'll see how that goes, but we are coming in up into a resistance level that is up here, and I have a feeling this morning we're probably going to see a pretty sharp reversal in the US dollar back down, and we're going to see a strong bounce in equities this morning, but I'll get to that in a little bit. Now the strength in the US dollar, let's take a look how it's affected some commodities. Here's crude oil chart. You can see crude oil, it had that, we got into that oversold situation, and I pointed out we'll likely see a bounce to the 105, 105.50. We did see that bounce to the 105, came to 105.49, and from there it hit key resistance, which is right through all the bottom of all these pivot lows, and from there it's reversed straight back down, and back down to where it was trading just a couple sessions ago. Overall, I'm not a fan of crude oil, and I just don't like the way it kind of broke down and moved, and how it's been rejected by this resistance line. So I'm steering clear of crude oil, and just kind of observing it for now until I see some type of setup that has potential in my opinion. Now looking at precious metals, we're seeing them get hit pretty good today. Yesterday they got hit. Yesterday you can see we had this big red down bar, came down, broke this pivot low. In overnight trading we've more or less seen a little bit of a mini flag. If we drop to a smaller time frame, this would be a little bit of a bear flag, and now it's continuing the second half of that measured move, breaking down even lower, with gold down about 2.7%, silver's down about 4.1%, and they're pretty much we're just seeing money really roll out of precious metals with a strengthening dollar. Now looking at GDX, gold miners, it continues to try and form this base here, and yesterday it gave back all of its gains. It was actually underperforming gold substantially yesterday before the FOMC meeting, which was a little bit of a sign that the news might not be so good for gold. And anyways, we got the FOMC news and we saw everything just kind of tank. Overall, this pattern here, if this strength stays in the market, then we're likely going to see metal stocks continue quite a bit lower. They're consolidating here, which will end up being a possible bear flag. And if you take this measured move from this level to the high, you measure that to the downside, you're looking at a pretty sharp breakdown in gold mining stocks. But overall, I don't think we're going to get the breakdown yet. We're very close to a possible market top, and it might be in the works right now. But I'll cover what I think is kind of unfolding and what we have to be aware of. But overall, it's still holding up at support and oversold here, and we'll see how things kind of move forward. I don't want to touch gold mining stocks or anything just at the moment. Looking at silver, here is the silver chart. Silver, you can see yesterday sold down pretty strong, continues to move down. It's holding up a little bit better on a chart wise for gold. It hasn't broke this previous pivot low, and it's still holding its key previous pivot low, where gold has actually cleared both of those and headed lower already. Silver, you can usually play catch up pretty darn quick, so I'd be very cautious with any silver positions. Overall, we're going to just kind of stand back and see what happens in the next couple trading sessions here. The patterns on the charts are showing a little bit of weakness still, and not going to take any action until we see some clear type of setup, either of a bottoming pattern or an oversold condition where they become extremely oversold and they're ripe for some type of bounce. Now, taking a look at the SP500. Here's the daily chart of the SPY ETF, and this is zoomed out pretty far here. We're zoomed out about a year and a half, but overall we are starting to see a little bit of chop here where it's kind of ping-ponging between some price action. It's running higher. It's very similar to what we saw. We saw this back here a couple times. We saw it again over here. And more or less in a runaway market, you can get these running corrections, meaning you just get a lot of seesaw action where it's pivoting back and forth, and more, instead of it actually running up and having a pause and then continuing higher, the market actually runs up and then it actually just continues to shake the market up, and it has a running correction, and then it more or less continues its run and keeps going. So it's called a running correction, and it's possible that's what's unfolding here. So we got our eyes peeled for possible reversal to the downside, obviously, but overall this looks and feels as though we're just seeing some correcting in the market while there's still lots of strength in it, and we could see the market really extend to the upside going forward. This seesaw action is going to bring in a lot of people looking to short the market, and you know, if it can catch them off guard, once people build up short positions and it starts to run to new highs, we're going to see sharp short covering, and of course you end up getting this type of move here like we saw, where it really just extends and really kind of puts a blow off top before it starts to put in a real topping pattern. Taking a look at the futures chart. Here are the futures chart and some support, horizontal support lines. More or less, yesterday the market closed up here at the top of the screen. Futures trading, we're seeing it continue to move down. We're down about 0.75% this morning, so we have a pretty good gap to the downside. But if you draw some simple trend lines here, we are going to be coming down into a support level. Just connecting these previous connections here, we do have a support level down around the 92. If you want to go from these pivot lows down here, and we've got this horizontal support which act as support and resistance many times before, so we are kind of coming into a zone here where we're likely going to see the market put in a bounce this morning. Now, I wouldn't anticipate it to happen till after the market opens and we see the market really flush out. I think that's kind of what the market wants. It's trying to get people to go short. It's trying to shake out the longs. It's gonna come right down into this support box here, where I think we're going to see washout and panic selling in the market, and then from there we're going to see a sharp rally to the upside. Now, the price action that we're seeing, if we could just zoom out a little bit more here, this type of price action where you see it kind of rounding and picking up speed to the downside, that's actually a bullish, in my opinion, it's a bullish pattern. It's when it drops straight down and forms a bear flag and continues to stair step lower, that's you're in a bearish market. But overall the market is running up, and then you kind of get these drops that kind of pick up speed near the end and they dip into support levels. that's when you usually get a strong bounce and we see things head higher. Now this here is a futures chart, is a 24-hour chart, and depending how you look at it, you could say, well, we got a possible head and shoulders, got a possible neckline coming across here, and that could be how it's playing out. Also, I want to just kind of show regular trading hours. If you look at regular trading hours, you can see the running correction that we're getting, and simply you just connect the highs and the lows, and you can see, we're coming into, you can't see pre-market trading right now, but here is our kind of running correction where it's just kind of going back and forth. We are trading somewhere right around here right now. So we're going to see the market gap lower, possibly flush down, just like we saw down at these other previous lows, and then we'll see it possibly head back up, where it could go the halfway mark, consolidate for a bit, and then continue to just grind higher, or it could move to the upper band and then explode to the upside. Overall, if you were to zoom out and kind of look at these charts here, very similar price action to what we had the last time. You get a move down, you get into a support zone, you get a strong bounce into the close, a little bit of a short covering bounce. Next day you get a big gap down, panic washout selling, and then you see a snapback rally that really carries you over for a couple trading sessions to new highs. Very similar price action happened yesterday. We saw panic selling, and then more or less we saw people covering their shorts into the close. We saw that hiccup, and this morning we're going to get that gap down into an the market is going to gap into an oversold territory, meaning there's going to be panic selling. We're beyond a normal move for a gap. We're coming down into a support zone. I wouldn't be surprised 10:30 to 11:30 we see the market really bottom out here and then start to head quite a bit higher. Now this gap is actually a pretty sizable gap, so it might not actually pivot around 11:30. It might actually pivot a lot earlier, so I'm going to keep my eye on the market, but overall I do feel as though today will be the day where it either trades and stays in this tight little range here and then has a strong recovery after that, or we're just going to gap lower, see some panic selling, and we're going to see it run strong into the afternoon. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.